All right, so we're going to go today into lines and the importance of why they are so important. And we will definitely make sure that we address the topic that was on the table along some other things that will help you. So just make sure anybody, when you go through these classes, Tuesdays are really for you, as I said, to help enhance your forex trading journey. We're not taking the place of the academy. You know, it's always there. Go Live Academy, Go Live is always there. One of the one traders, educators that we follow is Orrin Wright. And actually Monday, Tuesday, and Wednesdays on 9 p.m., he is on the Go Live Forex channel. What that means for you is there's over 80 different educators. And if you know anything, if we have too much of a choice, we're not going to do anything. We're not going to do anything. Orrin keeps it simple. Dan and I both do a lot of trainings under him. So we follow a lot of his teachings, which is pretty simple. Now, there's others on there. Find who resonates with your spirit most. But if you want to start going on a journey, give yourself permission in the next 90 days to stick with one educator. And he's on tonight at 9 p.m. So if you go into Go Live, you have to be active because it's part of your membership. So go back into Go Live. The educator's name is Orrin Wright. O-R-A-N is his first name. Wright, W-R-I-G-H-T is his last name. Check him out. And if you like him, you love him. If you don't, move on to someone else that resonates with your trading style. All right, so the prerequisites for this.
Did he just for Orrin Wright? Because I remember at one point I was able to watch all of his videos perfectly fine. But then I think the channels changed and you had to subscribe to levels unless it was like a Wednesday night. Is that still the case? Or
I don't think so. I don't think so. Just try to go back because Levels is his baby. That's his software that he started a couple of years back. So if you can't, let me know, but you should be able to go back through his channel unless it's some technical difficulty issue, and he just asks to join on his Zoom.
Okay.
That's the only time that they can't. But just make sure that you, for this particular one, I'm just going to be doing a review and touching on where things are for your trend lines and your horizontal lines and the Fibonacci lines, because you might not do anything with them because you don't even know where they are or how to use them best. So make sure that you at least have gone through basics 100 through 400, 300 section really for this to be effective. The next thing you want to do, anytime that you're trading, make sure that you are checking out news. And I don't mean Channel 5 news. I mean news, economic news that could disrupt your pairs. And these are just some of the extra little things. You don't have to do this today. But my FX book or Forex Factory, go there and make sure before you start trading, make sure that you're checking out news. To check out, let's just say you're working with a particular GBP pair or something with JPY. Make sure before you sit down and trade anything that you make sure is anything affecting my currency around the time that I want to trade. Okay, so that's just a little tidbit before you start sitting down. And watch out for one of the effective tips to getting started with trading. I'm going to have that video out this week, so it'll go a little bit more into getting your morning started with organization. Okay, you want to know how to count pips. We're not going to go into that today because you should know how to count pips. We have videos on all of this, just in case if you need to. And in doubt, you either got your fingers, you got pen and paper, and you have a calculator so that you know how to calculate and count. What's going to be covered today is what are trend lines, what are the Fibonacci lines, how do you properly use them, and how do you mark up your charts. Also, which charts are going to be the best ones for you too, and when to use this type of analysis, which is technical analysis. Okay. So how many of y'all have faces like green right now? Give me a 1. If your face is like, I've done this, this is just a refresher, give me that. Which one are you? Green, yellow, or red right now? Chat box. Which one are you? Be honest.
And what are we saying green
This is
for?
before. Green is I've got trend lines down pack. I think I got everything zippity doo dah down. And yellow is just like I need a little bit of help. And red is just like, look, start me now. Start me now. Yellow, okay, good. Red, all right, cool. Okay, true. See, she can do the class. Deborah, is number 1 green? Show me, just give me colors. Most of us are in the yellow category because we're just like, look, just I'm a sponge. Now remember, everything is a learning process. Once you hear it, and I want you to think about when we talk to children. All right, thank you. When we talk to children, what do we keep saying? Didn't you hear me? Did you hear me? Did you hear what I said? Right? I'm not speaking to you like a child, but I want you to reference the same applies as when we talk to children. They heard us, but did they understand us? Is the real thing, right? We want to make sure that we are understanding this terminology, right? Raise your hand if that's a yeah, understanding. So learning is that takes place, and it could take weeks, it could take months, of course it could take years for some people. You have to learn your spouse, you have to learn how to be a mother, you have to learn how to be a wife, you have to learn how to be a forex trader, you have to learn how to drive. But once you understand all of that, you're like, I got it, next level, please, next level. And that's all we're doing, is taking things to the next level, because I want to make sure that you are understanding what's in front of you. Is that fair? Because when they say it's levels to this, it really is levels to this. And when we go and we joke around in some of the classes where we say, if you could really understand shapes and count to 3, you got this. You really do. You really do. I just want to make sure you're understanding it. This is what everybody should look like afterwards. Now, I'm not saying it's going to be today, because your time could be different when it could be understanding. So give yourself time, give yourself patience. Here's tips for a successful trader. You ready? 1, we're going to recognize patterns in the market. Recognize them. Meaning, are they uptrend, downtrend? That's it. It's up or down. It's either up or down, or it's consolidating. One of 3 ways that it's going. Know when to trade and not to trade. Sometimes in your gut feeling, you know when you should not be trading. You're not feeling well. The market's just not really talking to you. So you want to know when to trade and not to trade. These are successful tips. Follow a plan. Follow a plan. Like Ronnie and I were going over some things today. 2 weeks, last week actually, was just a follow-up. And it was just, let's start. We placed 5 trades in the harmonic scanner Thursday. All right. We followed the plan. Right? And guess how many actually hit profit? All of them. Follow a plan. Follow the plan. And we did that today. So how many of you need a plan that you need to just, hey, Lori, I need you, or I just need you for 30 days. I just need a plan to just be consistent. Just, all of that. You can reach out to me and let me know if it's something you need. And I got something planned for July. Mr. Dan was doing his 30 for 30, getting some of y'all up at 2:45 in the morning, right? You didn't see me on there but one time. One time you saw me on there. But I got something for you all who like to get up at decent times of the day. 8:30, I got something for you. So stay tuned. Stay tuned. Stay tuned. All right, so number 4 is you want to manage your risk. You think about your risk first and then your profit second. Manage your risk first. How much am I willing to lose? And then we focus on how much profit. This is multiplying your account. Multiplying your account. This is not smashing your account, being a millionaire tomorrow, but it is multiplying your account that you currently have. All right. And then the last thing is, be patient. Be patient. Nothing more, nothing less, but be patient, because it is worth it. It is worth it. All right. So let's get into why we are here today. Let's focus on what is a trend line. A trend is when prices move in a zigzag fashion, but still follow an imaginary path or a trend in one direction. The trend can be further defined by a trend line. Trend lines connect significant lows in an uptrend, and they connect significant highs in a downtrend. So what I'm going to do is play one of the videos first, so we can first of all capture everything we need to get started for today. And this is the IM Academy, of course.
Welcome back to the IML Academy. In this video, we're going to be discussing what is a trend. Now, the trend is the overall direction in which the market is moving. If the overall direction of the market is up, we're in what's known as a bullish trend. And if the overall direction of the market is down, we're in what's known as a bearish trend. Learning how to identify trends in the market is very important because it helps traders find the best place to buy in an uptrending market and the best places to sell in a downtrending market. In order for a trend to be established, the trend has to exhibit some very key features. Now, let's take a look at a live chart. And what I'm going to do here is I'm going to walk you through a bullish trend and a bearish trend in the market so I can teach you guys the vocabulary and what actually makes a bull and bear trend inside of the market. We're going to begin with the bull trend right here on the left side of the screen. Anytime a bull trend starts, it starts at a low point and then makes a run up in the market and creates what's known as a high point in the market. From here, the trade is going to eventually turn around and come back down. Now, once the trade comes back down and finds this new low point, before it continues this high point, let's label this what it is. This is the new low point known as a higher low inside of the market. The reason why we call it a higher low is because this low is higher than the former low. Now, as the market continues to resume up, the market is going to make a higher high inside of the market. The reason why this is called a higher high is because it's higher than the former high. And as long as the market continues to make these formations of low, high, higher low, higher high, higher low, higher high, we're in what's known as an uptrend inside of the market. Now let's come over here and split up the market. So we can see on the left side of the screen, the market is clearly in a bullish trend, making higher highs and higher lows. Now, once the market reaches a pivot high, the market is going to eventually turn around and start a new downtrend. So in order for a new downtrend to start, the formation of the trend is going to reverse. The market is going to start at a high point and come down low. Once the market makes a low point, it's going to run back up and create a new high point. However, this high point is going to be lower than the former high, which is why we call it a lower high. When the downtrend continues, it's going to continue its formation by making a new lower low, run back up to make a new lower high, and as long as it continues this formation of high, low, lower high, lower low, lower high, lower low, we're in what's known as a downtrend inside of the market. Now, it's very important that you guys continue to practice learning how to identify high and low points inside of the market so you can begin to do what professionals do, and that's called trading with the trend. Always remember this one important tip: the trend is your friend. Continue to do your work on the charts, look at uptrends and downtrends inside of the market, and in no time, you'll be able to learn when to buy and when to sell. With that being said, that's going to conclude our training on trends inside the market, and we'll see you guys in the next video.
All right, so that's one. And all this is going to make sense as we're putting all this together. And here we're going to look at support and resistance.
Welcome back to the IML Academy. In this video, we're going to be covering what is a support, resistance, and trend line, or better known as an SRT. SRTs are another way for traders to be able to start reading price action inside of the market. SRTs create points where the market can potentially react and reverse, giving traders insight to what is going to be happening with the market. Now, before we begin to explain how to draw support, resistance, and trend lines, let's first focus on the psychology. We'll begin with support and resistance. Now, a support is like an acting floor. So we'll get started at this lowest point right here in the market. We're going to highlight this low point and drag out this invisible line here to the future. What this is basically serving as is this is serving as a floor, stating that anytime price comes back to this imaginary line, price may have a reaction and come back up. Now, when price does begin to resume and come back up, price is going to eventually hit what's known as a resistance. A resistance is like an acting ceiling inside of the market. So if you see when price was coming up, price hit this area one time and rejected that area. Price returned to that area a second time and rejected that area. Price came back to it one more time and rejected that area until price officially broke through that resistance, or what's known as a ceiling, and continued to climb and make a higher high inside of the market. And here was the new resistance where price started to react. Now, taking a close look at the market, look at how when the market ran up and created that resistance, it came back down and created basically a new floor. It created a new support inside of the market. Now, I'm going to drag this invisible line out to the future because it's important to understand that these invisible support and resistance lines play as vital roles where traders are going to run into some trouble. Look at the market like a free-flowing river. If the river was flowing and then ran into a rock, it's going to cause the direction of the current to move in another direction. And then if it runs into another rock, it's going to cause the direction to move into another direction. And that's what basically support and resistance is. They are acting floors and acting ceilings inside of the market that's going to cause a reaction to price. So it's important that you understand what support and resistance is, because you'll better understand where to buy and where to sell in the market. Now, let me give you one more example before we move on to trends. Let's take a look at how when price created this resistance and rejected the resistance, it created support and rejected the support before continuing up. What was once resistance, as you see here to the left, if we take a look to the right, then became the new acting support. This invisible line became a new acting support. When price continued up and found a new resistance, it started to come back down and found a new support. Do you see how this support was also this previous resistance? So support and resistance is one and the same thing. They are just invisible lines that you can drag out once they are created by price reacting to these zones, giving us readings to be able to see again where to buy and where to sell in the market. This plays key and vital information when it comes to price action trading. Look at how when price came back up to this resistance and we moved this resistance line over, it then became a new support in this area before finally breaking through. Price came back up and now we're here at a new resistance, which also acted as a future resistance for price. So if we take a quick look, just look at support and resistance like a house. Whereas price is coming up and down in an uptrending motion, these support and resistance lines are showing traders the best areas to buy and sell with the market before the market starts to reverse and create these downtrends. Now, let's move on over to trend lines. Trend lines is what carries price in the upwards or downwards trend inside of the market. As we can clearly see, the market is creating this uptrending formation of higher highs and higher lows. Now, traders can begin to connect these data points inside of the market to see that it's carrying price in an uptrend. And as long as the formation is remaining above this uptrending line, then it's safe to say that we are in an uptrend. Now, once price runs into a resistance that it cannot break and it cannot go higher, price will begin to reverse. And as price begins to reverse, we can connect these low points right here in the market, and we can create what's known as a downtrend or downtrending line inside of the market. And as long as price stays below the downtrend here, we're in what's known as a downtrend. And price will continue to do this. Price will react at support and resistance zones while creating uptrends and downtrends inside of the market. So I'll walk you through about 2 more examples, and then we'll get ready to wrap up this video. So as we can clearly see, price is creating higher highs and higher lows, resuming in this uptrend formation above the trend line. Then price is creating lower highs and lower lows, staying below this trend line, resuming a downtrend formation, until ultimately price runs into a support it's not able to break, and then price starts a new uptrending formation. And look at how price is coming here, finding support, and continuing an uptrending formation in this market until price is able to finally break the support zone, break the trend line, and then start a new downtrending formation. Now, this concludes our training on support, resistance, and trends, which is better known as SRTs.
Now I need you to recite all of that back to me. All of it. We can recite it right on back to me. That's going to help on the next thing what we're about to talk about. Okay? Any questions so far? Remember, it's levels to this, and I keep saying that it's levels to this, and no pun intended, but it's everything is levels when it comes to trading. Okay? Everybody okay?
Yes, ma'am.
Yes, ma'am.
All right. Now, the question, I think it was Tracy, or who was it that asked the question about the platform?
Tracy.
Tracy, there's 2 different platforms that one could use. Now, many of us on here are using Hugo's Way, right? Hugo's Way is one of the traditional trading company, brokerage companies that is available for forex trading, and that's probably the first place you can go to your computer and download that onto your computer. I really don't have a preference. I have TradingView and I have the MetaTrader 4 on my computer. Now, I can't trade on my phone. That's one thing. If you're trying to do these analysis on your phone, it's going to be super difficult unless you've got super duper eyes. So it doesn't really matter. It's just use one of them so that you can, figure with your eyes. Like here is MetaTrader 4. For example, you can still use everything that we're going to talk about on here. Here's just an example. I just have GBP USD, for example. All right. On this toolbar, the 1, 2, 3rd toolbar, you're going to find you have your vertical line, you've got your horizontal line, and you've got your trend line. You also have your Fibonacci right here. Those are only the 3 tools that I personally use when I'm using MetaTrader 4. So if you're going to use this one, let's look at it first to see, and it's really just a personal preference on which one you care to use. I started out with this one. I use this one now because I need it for precision on pricing. So if I'm using Hugo's Way for pricing, I'll come here to find out what my price is for trading. If I'm going to TradingView, understand that TradingView does not wrap in your price, your exact price that you're using for trading, because it's not attached to a broker, right? So if you're going to go and try to get as tight as possible, you want to use the broker that you're using. So I would say start here and then start branching off to TradingView to use a lot of the other enhanced features that they have. Okay, so let's just say I'm looking on here, and when you're looking at this app here, this download right here where you've got two buttons up here, if it says shift to the end, I just hit that so I can get my current pricing, and that way I can just move my chart all the way over to the current candlesticks. Over here on the right hand side are all your current prices. This is your current prices, of course, from low to high. And down below are your dates. So if I'm doing something like a trend line, I want you to remember 1, 2, 3. Just write that in the chat box. For trend lines, I want you to remember 1, 2, and 3. Type that in because I need you to see it before we put it on the charts. 1, 2, 3. That's what you want to think about when you're doing a trend line. When you're doing, thank you. When you are building your house, meaning you're trying to develop a buy or a sell, when you're trying to figure out if you're going to place a buy or a sell, understand everything that we're doing here is technical. This is your technical analysis of building your house. 1, 2, 3. And trend lines, all you need to have is 3 touch points to make sure that that line is solid, is usable. Okay, so here I'm just picking a random one here. What you can do is move the candlesticks wider to make them fatter, to make them smaller here, or you can use the plus and minus to zoom in and out depending on your eye level. Okay, so I'm gonna just leave it here. So if I need this trend line to go, because I wanted to kind of find out, you're doing the trend lines to figure out a breakout of, if the trend is going down, as you see right here in this particular movement, it's a downtrend, right? If you caught this, you really want, if you're in the middle of this, you really want to find out when will be a great time for me to go in for a buy. Now, you've got some things like the harmonic scanner, as I had shared a little bit, a couple minutes before the video, the first part of July, what I'm going to be doing is I'm going to be doing a 30 for 30 challenge, but it's going to be using the harmonic scanner, and it's at 8:30 in the morning. Praise God for those that are already up. So that's going to be for July. For those that want to participate, it's not anything, I mean, you could just roll in on my webinar at that time, because I will be up during that time and I will be trading during that time. So if you want to roll in on that, then you can come in and see how I use the harmonic scanner and the SAR indicator to really make profitable trades. Sound good? Is it a decent hour for people?
Yes.
8:30 to 9 o'clock, we're in and out. And once you really get good at this, you can really start to learn. You can make 3 to 4 trades in the morning within 15 minutes, and you can go back to your day job. You can go back to whatever you're doing. Okay? So just just know that you're the first to hear about that, but I will make sure that I share everything with you on that later, so that the first of, well, actually it's June 30th, Tuesday through Thursday, I'll just be doing it. Okay? Sound good? So in order to do certain trade styles, this is one particular trade style. Some people just use the harmonic scanner to get in because those setups are already done for you. Head and shoulders is already done for you. The Fibonacci, it's already done for you. So the harmonic is very nice for your first time really training. It's awesome. Now, once you start to learn and develop a little bit more into, all right, well, I want to start doing some things on my own, this is what we're going into. Because if you could learn to draw trend lines and start to develop your own analysis, then you don't need the security of certain apps. You don't need signals. You don't need anyone giving you trades. You'll be able to go in and do it yourself. So really, I don't want to go too deep into it, but I do want to go into how and where you can kind of find these things. So in your MetaTrader 4, on this bar, the third bar down, as I said, you're going to find your vertical line. If I need to put a vertical line here, boom, I messed up. I didn't mean to put it there. Double click it and you can move it where you need it to go. You can move it. All right. If I need to delete it, double click it until you see that circle pop up and then just hit the delete button. If I want to use the horizontal is right next door to it. Click on that and let's say I want to drop it up here. Oops, I put it in the wrong spot. Double click it until you see the ends have like a little bar on there. Move it around. Okay? If you don't want it anymore, then just delete it. You just hit the delete button. If you want to change the color and you don't like purple, double click on it, right click it, and everything is taped and recorded, guys. So this is going to be recorded and uploaded by tomorrow. Hit horizontal line properties and you can change the color. You change it to whatever you want. You want a blue line. And you change it to blue. All right. That way you can move things around. So these are your lines that you really want to move, because if you're trying to get precision, you really want to focus on putting these on as much as possible. Any questions? How do you change time? What do you mean change time? Travis, you can unmute yourself. Also, if you hover over, let's just say I put my horizontal here, and I can't read my pricing over here. If I put my cursor up here, you can see it pops up 1.25463. Because sometimes our eyes are playing tricks on us, so you may not be able to see the pricing all the way to the right. Just put your mouse right on it and you'll be able to see it. Same thing if you wanted to be able to do the horizontal. The time is down below. Travis, I think that does what you're looking for. So if you can see the date is down below.
Right. Yeah, I can see it, but I'm trying to see how I can place it on there like Eastern Standard Time. Cause mine, I don't know why I can't put it on there.
Why you can't put it on there?
Right. Like, how do I change like the actual time?
You can't change the time. The chime is in a whole different, just depending on which pair it is, you're going to have to look at the way it's given, because unfortunately it's all the pairs are not given in just Eastern time.
Right. I would just want, how in TradingView we can go to New York. But
I'm not sure how to do it on here. We can ask Dan that question. We can kind of park that question and definitely get that answer.
Okay, thank you.
But on here, you can just hover over top of it so that you can see where your price is. Like if this particular candlestick is here, just hover over top of it and it'll give you information of what you need. Sometimes people are doing the box strategy, so they need to know the specific time. Well, you need to make sure that you're moving it to the right time. If you look at the very bottom where it's red, that's where you will know where your price is and the specific time of that candle. The candle, of course, is going to resonate with whatever time that you're looking for. If you've got a 4-hour candle, 1-hour candle, 30-minute, everything is going to change according to the time that you have on here. Now, for those that like using the Fibonacci, I love using the Fibonacci, and I want you to just think about the Fibonacci is something where you can independently go in and start really looking at the highs and lows on your own and doing more analysis on your own. Okay, so check this out. I'm using, this is just random, GBP USD. What goes up must come down, right? What goes down, eventually price has got to go up. So I want you to take a look at this particular chart and notice there is a downtrend that happened hours, days ago. And if you want to see, well, if this has a higher high, and a lower low down here, what you want to see is, well, if this thing has gone down, this sucker's got to come back at some point. So using the Fibonacci is wonderful, where what you can do, let me try to shrink this in a little bit so everybody can see okay. I'm going to take the Fibonacci retracement tool, which is up here, and I'm going to drag it from my higher high down to the lowest point. What I'm trying to establish is, where is the zone? Where is the zone, the support and resistance, where I need to focus on a buy? A buy opportunity is coming if you see this kind of downtrend happening. All right. So if you haven't used the Fibonacci retracement before, it's probably, you know, the second thing I learned once I started trading behind the harmonic scanner. Check out the Fibonacci. You're going to click on it. All right. On my mouse, I don't have anything on the mouse right now, but it's loaded on here. Find the higher point and just click. Drag your mouse down. Oh, you want to show off. Let's try it again. Take it to the higher point and drag it down to the lowest point. Yes, take the lowest point. So the higher point is up here, the lower low is down here. The zone that you're looking for, if you take a look, is already placed here. 0, 23, 50, 61%, and 100%. It's a known fact that if this downtrend is going down, it will give you pricing at least 50% of where you started. So if this downtrend represents 100%, you see it's now at this pivotal point, what really down here, it started thinking about going up. It consolidated and then it went up. The Fibonacci retracement is going to give you a good pocket, a good zone of where should I be going in as a buy. And I want you to write this down, take notes, take notes, take notes. Between the 23% and the 50% line is a juicy spot for you to go in as a buy and a take profit. And if you know how the harmonic scanner works, this setup is already done for you. And by the time you get to the harmonic scanner, this analysis has already been done. So it's a beautiful thing to use the harmonic scanner because it's using everything like this that puts this analysis into practice. If you need to move this line, if you need to delete it, you're going to click at the corners, one of the corners, and just hit delete. And there it's gone. So the zone that you need to pay attention to, whether it's a downtrend or an uptrend, is what percentage? Between 23 and 50%. So let's look at that one more time. I'm going to click on the Fibonacci retracement, click on the high point, drag it down to my lowest point. It doesn't even need to be the body. Yes, take it down to the wick. All right, and click it in place. Now it's in place. So now you can see the percentages are here on the side: 0% and 23%, 38 and 50. So let's act as if we got into the market and it was around here. Around here. Everybody see that? Down at the bottom. Let's just see. None of this happened yet, but let's just act as if this. You're going to see how the Fibonacci is going to work with the tools that we already know about. The horizontal line is up here. You're going to slap it on your 23% line. You're going to take another horizontal line and put it on your 50% line. This is going to give you the range so you know the pocket of where you can put a buy entry in. Buy stop. It depends on what time that you're looking at this trade, because if you saw it down here, you can place a buy stop at this price here and take it up 24.50 and taking on up to 24,879. So a potential of 30 pips here. How many pips are you guys going for in your challenge a day? 30? Some of you are doing the challenge, some of you are not. But if you're looking, if I can get at least 30 pips on one trade, this is how the Fibonacci retracement tool works. I'm not going to go too deep. Go back into the academy so that you can go a little bit more into the Fibonacci retracement. This on the 1 hour would have taken somebody 1, 2, 3 hours to make 30 pips. 3 hours. And remember, you're not setting it and watching it. You're setting it as a buy stop entry, because if you were to get it down here, you're going to put your entry price here at the 23% line. You're going to put your take profit up here. So anywhere in between here, you could do 20 points. You could do 20 points. But this showed you what it could do. This showed you that it gave it to you in 3 hours. And you're going to put your stop loss at the lower low. At the lower low. That way you can feel with confidence it's going up, because it needs to give you at least 50% back of this downtrend. How does everybody feel about this for their lines? Horizontal at its best. Always remember the 23% line is when you want to enter the market. The 50% is when you want to get out. Questions, questions, questions.
Yes, ma'am. How you doing, Ms. Lord?
Hi.
All right. Is it the same for the downtrend as well? I mean, the uptrend as well?
Sure is. We're going to do that next.
Yes, ma'am.
You ready? Are you driving and trying to do this at the same time?
No, ma'am. I'm listening.
All right. Don't lie to me. Don't you lie to me. I'm going to see where you are. All right. So I'm going to take this off so we can look at the opposite. We can look at the opposite. So this is a downtrend. Let's go in the past and let's look for something that was going up. Here we go. Here it wasn't that far back. Here it is. Here's a perfect example in the past. If you see a noticeable lower low, higher high, lower low, and this is a good one right here. All you're going to do is take your Fibonacci tool, take it at the bottom now, slap it on there, double click it, and stretch it up to the higher point, including the wick, Take it up to the higher high and take your finger off. So now it's set in place. It's clicked in place. Now the numbers automatically reverse themselves, where you're going from 0 to 23 to 38 to 50 to 100%. What goes up must come down. So let's act as if none of this happened and we're just looking at the market like right around here. If we place this Fibonacci tool on here, I'm going to get my horizontal line. I'm going to smack it right on the 23 line. 23% of that uptrend is right there. Looking for 50%. This is where my butt's going to get out of the market. All right, so let's look and see what happened. Did it give you what you needed? So depending on when you saw this in the market, let's see, you saw it around here. You got in, you did a sell stop. Now you're doing a sell stop order because the market's going down. The market is going down. If you saw it at this point, here you are. You entered at the 23% line. This one took you, this one was a little bit longer than 3 hours. But if you waited to get all the way down here, it would have taken you, let's start here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24 hours exactly, you would have got your pippage. You would have got your pippage. 25, let me see, how much was that exactly? A little bit over 40 pips. But guys, these are important so that you know your lines. These are important so you know your lines. Take them off, just double click on the corner and delete it away. Your Fibonacci and your lines can just go right away that way. Questions? Now I want you to take a look. Go ahead.
I always used to get confused about where to place my fib. So I think that that definitely helped. So I want to find an obvious uptrend or downtrend like you just did, and then get in when it's coming back the other way.
Yes, ma'am. What
Got
goes
it.
up, at some point it's got to come down. You're just waiting on it. You're just waiting on it. And I love sell stop orders. I love buy stop orders because it allows me to go in to place a pending order because it could activate maybe 3-4 hours from now. Right? But at least you put the order in because you can pretty much know the market will always give you back at least 50% of that uptrend or that downtrend.
Perfect. That makes sense.
So
Thank you.
I would say when you are progressing in your trading, know that the harmonic scanner has been around since day one, since the company's been in existence 7 years ago. It works. It factors in all of those setups so that we can make the decision. When we see that letter D on the harmonic scanner, all you need to know is that this thing has already taken into consideration head and shoulders pattern, Fibonacci, support and resistance. All we need to do is know when is the right time to get in. So when we're starting that challenge 8:30 in the morning, next Tuesday, join in if you want so we can start getting some pips in the morning when you guys are out for breakfast, when the sun is already up. And that way you can see a little bit more how we analyze the harmonic scanner a little bit quicker. It's a little bit quicker, and this is what you progress to pretty much next. Okay? Now, the last thing I'm going to show you are the trend lines and how you can independently use trend lines. Remember, 1, 2, 3. 1, 2, 3 touches is what's going to give you a good probable reason to get in and know that the trend line is your friend. Now, most of the time, you're going to use the candlesticks typically when you're trading. But to avoid the noise, I like to use a line chart. And Ronnie, this is something that you can use also. Everyone, you can use the line chart and you can switch your candlesticks. So up here, where it says charts, you can change it to whatever you want. So if I changed it to line chart, it will take away a lot of the noise from all of the pullbacks. All right, and then you can clearly see a little bit more on the candlestick. So let's look at this is what the line chart looks like. When I switched it from candles, now you could see the points a little bit better when you need to do your trend lines. When you need to do your support and resistance, switch it to the line chart. I took GBP NZD right before this call, and I wanted to show you how to draw a trend line. So when you go into MetaTrader 4, remember, you've got your trend line right here. Your trend line is right here where it says draw trend line. So you can use that. All I did was I took the trend line and I took it at the top. And how many points do I need to determine the right trend line? How many?
3.
Thank you, baby doll. 3. So look how many times this line needs to touch the trend line before it breaks out. At least 3. At least 3. We've got 1, 2, 3. Once you see that the line chart, the lines have touched, and this one here didn't really touch, but when you draw the trend line from the higher high to lower low, when you get that, you're determining when is this thing going to go up. I don't know when, but if I see a noticeable downtrend, I need to know when is this thing going to go up so I can put in a buy stop order at some point. All right, well, let me remember, as long as this trend line has 3 touches from the candle, just turn it to the line chart so you can see it better. 1, 2, 3, it's ready to come out. And look what it did right around this pricing right here. All right, this is the golden spot where when it crosses over, when price crosses over the trend line, bam. Now, as long as it retests this, and that simply means, because this one didn't retest yet, but what that means is if this candle touches this candlestick, that means this trend line, that means it retested, then it should go up. It continue to go up. It should continue to go up. Sometimes it does not retest. Sometimes you'll see it like this and price will keep going up. But as a mode of fashion, you want to make sure, draw your trend line. If it's in a downtrend like this, you want to draw it from top to bottom. Make sure that your lines are hitting it at least 3 times. Watch and put your horizontal line right around this area because you want to pay attention. This is going to be my entry for my buy stop. You're going to pay attention to it. And then when you see this price touches this line and then goes back up, that's called a retest. Then feel with confidence that you can now put in your buy stop order. Your sell stop, your stop loss, you can feel with confidence that it can go down here, depending on your personal, if you want to put up a little bit closer, but down here, you see that that's your support line. That is a line of support. So feel with confidence that that can be your stop loss. Your buy stop is going to be somewhere in this area for price to go up, however many pips that you choose, baby doll, 20, 30, whatever pips. All right? And this
So you're not gonna put the.
Go ahead.
I'm sorry.
Who's that?
You're not gonna. It's Travis.
Hey, Travis.
So you're not gonna put the buy stop soon as it crosses the trend line. You're gonna wait for the pullback.
I'm going to wait for the retest.
Right. Okay. All
Because
right.
sometimes it doesn't. Sometimes you'll see that this is setting up for inverted head and shoulders, as you see, and it needs to come down, and then it will go up. Sometimes, you guys, it will look like this and keep going up. You know, it does what it wants to do. But for us to know, wait for price to retest that trend line, and then feel with confidence to put that in as a buy. But if you start learning how to mark up your charts, that's what we're doing. This is what most traders do on Sundays. This is what, you do the night before so you can get a good idea if you're going to be doing this technical analysis on trading. If you're using the harmonic scanner, you don't really need to be doing all of this. But if you really want to get into the charts to see how the heartbeat of price works, you'll see it's pretty much a repetition. And if you start learning how to look at the levels, I remember when Orrin Wright showed us turn your chart to the line chart, I could see it so much clearer when I'm putting my lines in. Doesn't it look a little bit more clear than looking at all of the agitation of the market and the pullbacks? This is much clearer. So now I can go in, take my horizontal lines and put my lines of support and resistance in. Every level, you treat it like it's a reversal. If you see down here, of course, is at the lower low, where your next level will be. Well, where did it pivot? Where did price kind of stop? Right about here. And all I'm doing is just building my house. As you're building this house, you can start to know now when you put your trend line down, 1, 2, 3, you can pretty much know where price is going to go and how far it's going to go because it typically stays within the zones, the support and the resistance zones. Any questions? Now let's look at it on an uptrend. We already looked at it, how it looks on a downtrend. Here is putting a trend line on a noticeable uptrend. Same thing, you just pull the trend line, slap it down here, click it, and then you are looking for your 3 touches. 1, it touched it here and here. Here is your breakout area. Here's your, I'm sorry, your retest. It happened right here. And that simply means, well, let me just go back just one more time to make sure it's for real. And then it goes down from there. You easily could have gotten your pricing if you would have gotten into the market right around 22.79 and taken it down to 22.37, which is your price right here. If you're just looking for 20 pips, you would have gotten it. You would have gotten it. But this is about what, 40? Yeah, it's about 40 pips between here, this retest here, and this line up here. But again, I'm a safer girl where I'm going in between 10 and 20 pips. I want to get my money quickly instead of trying to go long distance. Some traders are more long-term swing traders where you're going for 80 pips at one time. If that's what you choose to do, then you understand this kind of analysis is necessary. If you're looking to pick up 10 to 20 or 30 pips in one particular trade, you would have got it if you did this analysis the right way. We already went into the Fibonacci, so that was kind of the bonus that I wanted to give you. But to also answer the question, I look to do pricing also and to do some alerts on TradingView, Tracy. So when I use TradingView, let me go over to TradingView. Here is TradingView, and you can do this on a free account to a certain degree. I go on here because let's just say I don't want to put a buy stop in, I don't want to put a sell stop in, but I want to put an alert in to let me know when price jumps over that trend line. You're going to have a paid account in order to have TradingView send you that alert. MetaTrader 4 doesn't do that kind of sexy stuff. So when you're, it just depends on what you're looking to do. If you're just doing support and resistance and trend lines, MetaTrader 4 is cool. As you start to move up into mature into trading and need more things like alerts being sent to you, then you're going to use TradingView so that it will give you that alert. Does that make sense, everybody? We'll get things wrapped up in about 2 minutes. I'm going to look at GU for a second and give you an idea of what the trend can do. All right, so this is current pricing. This is on the 1 hour. And if you need to increase the chart, you hit the plus. And if I need to tune it to the line chart, you just go up to the candlesticks here and move it to the line chart. That way you can see when you are placing your trend lines. All right. I see a noticeable downtrend here. So for example, if I am on TradingView, your menu is a little bit different. On the left-hand side, you see this bar right here, and there's a little arrow next to it. You're going to click that. Here's your trend line. Here's your horizontal ray line. And here's your vertical line. That's pretty much all I really play with over here, just those 3 things. And it's right here behind this bar right here. Right below it is your Fibonacci. So you can go down here, and here it says Fib retracement. Play with it. Play with it, and you'll be able to see when you place that. Let's just say the Fib retracement. I'm at the highest point, and I'm looking at the lowest point. I'm looking at the high and the low. All I'm trying to determine is when is a good time to get in the market. Let's act as if this didn't even happen yet. So if this is my high, this is my low. Let's go over here. And let's look for fib retracement. Whoops, wrong one. Fib retracement. I'm going to take the high and drag it down to the lowest point. Now, let's drag the screen over. Now you can clearly see. Let's go back up here and let's get some lines. Horizontal ray. Rays, my friend. Looking for the 23%. And we're looking for the 50% line. Remember, because that is my range of money. That is my range of getting in and getting out. So remember, this didn't happen yet. Downtrend. I'm looking for when a good opportunity is to get back into the market as a buy stop. Here is a wonderful way at this price right here. You can right click on it. You can right click on that line and go to settings. Wrong line. It's on the wrong line. It's on the wrong line. Help me. I'm trying to type on it. On that 23% line where that paragraph pops up, all you want to do, if you need to help yourself, is just copy everything 24,209. That way you can see where you need to be getting in. You also want to right click on that other line, the 50% line, and you're going to put in, this is my take profit line. And it's already highlighted, as you see to the right, 1.25102. Make that green so you know it's money. There's your take profit, 24,209. And that's about 90 pips. Do we need that much? Nah, you probably don't need that much, but it gave you a range where you made it. It gave it to you, right? So this is proof positive. This Fibonacci really does work when you use it. And this right here is probably one of the best independent tools that any of us could use while we are trading. How far back? Meaning how far back in just wherever you see a noticeable downtrend. It doesn't even have to be long like this. I mean, I've taken it where it's a shorter one. So it doesn't even have to be that long. Anything like this, I would have done it on anything that goes down, it's coming back up. So any downtrend or anything, you know, just take it as far back as you can, as closest to the current price, of course. Don't go too far back in the past, but I'm only taking this back just so you can see the setup. If you, like right now, if you see this is going up, you may want to put this lower low, but you don't know when this is finished. So you want to at least wait till it starts consolidating or it starts to drop down for you to feel confident, okay, now I can put it on there. But start to wait until you see, okay, if it's low and going up, it might still keep going up. So it'll throw your fib numbers off. So just make sure if you see it consolidating and it starts to then drop down, that's when you want to put your Fibonacci retracement tool on that right there. How does everybody feel about that? Does your face change now? How's your face feel? How's our face feeling?
Much better. About I'm somewhere in between yellow and green now.
Good.
I'm almost green.
Okay, but you're not red.
No, not at all.
Definitely not red. Okay. So this gives everyone the opportunity now to understand the importance of independent trading. Yellow. Yellow plus. When you start to graduate and know I could do this on my own, like there was a few months that I was sent last year that I was sending out trade signals. That's great for helping you practice place orders, but how is that really helping somebody learn to be an independent trader, right? How is that really teaching you how to do this on your own? And so the harmonic scanner, just look at it as its levels. Harmonic scanner is probably the one thing you want to stay on at least for your first 90 days, because it teaches you how to get in, when to get in, and understand how to count pips. Once you graduate from that and understand that methodology, now you can move on to a different technique. And this right here, learning how to place trend lines, you can do that independent. You can start making money sitting under the hairdryer. And then you can do these and set them up so that maybe today or tomorrow, these are a little bit longer terms. Harmonic scanner, money for today and tomorrow. These more technical analysis, these are going to be, all right, maybe Thursday, it may hit profit. You see the difference? So it doesn't matter on it. It's going to hit, but it's just up to your style. And always make sure that you are journaling and jotting down everything that you do so that you know what worked and what didn't work. All right, if you're placing your stop loss a little bit too close to your entry, then that would probably be why sometimes your trades are going in the negative too much. So for example, if you're looking at this if you're looking at this downtrend and you put the Fibonacci retracement on there, you went from top to bottom. Here's your 23% entry right here and right around 50%. Anywhere in between there, whatever you want to do, you get out when you want. You set your take profit. You could be at the 38 line. But rest assured, you're going to get a good pocket when you do this. If you put your stop loss down here, look at this. It's a line of support. So feel pretty good that it's probably not going to go past that for your stop loss. And what does it typically do? It takes you at least up to the 50% line of where this movement was in the past. So this thing ain't coming back. But if you put your stop loss like right here behind the 23% line, then you're going to be out. But if you put your stop loss down here at a reasonable range, then you will see now I'm starting to have a little bit more take profits than losses. So go back into the 200 section of the Academy. Make sure that you are studying and polishing up on these. You all are the first to hear about it, but June 30th, I'm going to just invite everybody on to my webinar and make sure that they are, learning how to do the harmonic scanner on their own. A lot of new people, you want to make sure that they're seeing this. If you're needing to get your 2 and free, go ahead and invite somebody on. I'm not going to go too deep, but they have to have membership in order to have access to the goods. And so this is a wonderful way for someone to easily see, I can do this in the morning before work. I can do this as I'm sitting at the kitchen counter. It took me 15 minutes to put this in, and I'm actually making enough money so I can take care of the tuition. I'm actually taking care of enough money to take care of what I need. You're welcome. So yeah, definitely. I want to make sure everybody on here should have 2 and free within their first 60 days. Within their first 60 days, because all you're doing is just doing this. We are online at 8:30 in the morning. I'm not going to record it, and I'm not going to do it as a live. That's one thing I'm not going to do. But what you can do is you can invite somebody on. I trust you because y'all are family, but they're not going to act crazy on here. But all you have to do is just say results. All you got to do is just show them results. Hey, I placed a couple trades. We did 3 or 4 in the morning. 3 out of my 4 trades actually took profit before lunchtime. before lunchtime. And they're going to be like, what you do? How did you do it? Well, we have software that shows us how to get these trades. We have software that shows us how to get the trades. And then you let them take it from there. I typically show them the presentation and that little piece of information. I already have that on our mytradinglounge.com page, right? So if you need somebody to kind of see, well, I don't know where to go for it, please send them to My Trading Lounge. And all they need to do is go here and take a look at that information. Let me send you mytradinglounge.com. I have the presentation right there on the front page. Pretty simple, right? And I don't even go into the salesy part of the commission sharing part. So this video goes just into the education that I Am Mastery offers. That's it. Because I know majority of our team, that's what we want. But if some people do want to come on board and they want to hear about it, then of course we can make sure that we share that with them. But here, the video right here, I Am Mastery Academy, all you need to do is just say, take a look at it. Let's connect after you finish watching it and see what you think. Remember, there's software included in our membership that gives us the answers to the test. You saw it on Tuesday. You saw it live for yourself, how pretty simple it is. Come back on Wednesday if it didn't make sense. She's going to be doing it again. So starting on June 30th, I'll go through that. So if it'll help you close the deal, or if it'll help you at least bring somebody in so that you have at least 2 people connected to your link. So you can get your service for free. Why pay for it? You can save that money for trading, right? Right. Next week, we're going to be going into marketing. So next Tuesday evening, we're going to be going into marketing and what kinds of things that you can use as a member to market your services online. At this time that we're in, people are home. Most people are purchasing at a high level online. They're purchasing higher level information such as education, hint, hint, online. So you want to make sure that you are visible online. And I'm going to show you next Tuesday how you can get that done. So make sure you're always checking the calendar under upcoming events, see what's going on. And I think that is it. Are there any questions out there? How did we do? I know we ran a little bit over on time, but I want to make sure that you got it.
This was awesome.
Yeah.
Thank
Loved
you.
it.
My first time doing a trade session, and this is all right. Thank you.
Yes.
Good. All right. So make sure you start taking a look. You're very welcome. Daniel Buffet does a lot more of the advanced topics, and we do this on purpose. I love when people are just getting started because I remember that feeling. I remember everything about the cluelessness and the impatientness and the discovery of what it takes to get to that next level. So I really appreciate the love. I really appreciate you guys, this is a great group, y'all. Like, we are really family, and I love the fact that everybody's learning together. So keep in mind, most of the training sessions that I personally love to do are going to be things like basic to intermediate coaching, mindset, bringing in financial planners to talk things through. And that way, at least you'll make sure that that basis is covered. Sundays, just be ready. Everybody may not be ready for Sundays. Okay, so you got to make sure that you're going through certain checkpoints to make sure that you are comfortable enough, because you might be sitting in front of Dan's session on Sunday like, I don't know what he's talking about. And he's probably talking about support and resistance. He's probably talking about Fibonacci. But if you didn't go through this stuff first, then it's not going to make too much sense, right? So it's my pleasure to make sure I continue on Tuesdays to bring this kind of base to our group and continue to keep doing that. And not really focus on chairman all the time like some people's groups do. But that's a whole nother story. Everybody good? I think you all got it all safe, and I think TradingView is a great platform. Try it. It is free. If you want to start using the other tools that may give you alerts, then make sure that you are subscribed to that, because it does cost a little bit per month. Let's just say right here, Tracy, I think this is one thing. Let's just say you wanted price to let you know when it crossed over this particular line right here. Now I'm hovered over the line. You see where this plus is right here? Hit it. Now it's going to give you an alert once price jumps over that price. Or what you can do is you can even do that on trend lines. If I right click it, I can add an alert. So if price moves over that line, then I'm going to get an alert on my cell phone. That's what TradingView can do. That's what TradingView can do. And you do the same thing. Let's just say you did a horizontal, a trend line. Right click on it, and this will pop up where it says add alert. And when price jumps over that, then you will get an email, okay, and notify on app. Isn't that cool? I love that one. I love that one. So if you don't want to be putting in a bunch of buy stop orders, and you just have to be careful. A buy stop order will go in and trigger, or sell stop order will go in and activate when you're in the bathroom. Who knows? But if you get an alert, now you got to go in, and now you're going to put that in as a market execution. You got to manually put that in, but the notification is just coming to you, letting you know, yo, the price just turned over where you want it. Okay?
Got it.
Got it. All right, cool. All right, so until the next time, you all just stay tuned in the Facebook group for anything new. And you guys have a wonderful, fantastic evening.
Thank you so much.
You are so welcome.
Thanks, Lori.
You are so welcome. I'll see you guys later.
Thank you.
Hey.
You're welcome. Have a good night.